The vast majority of clients I've helped in the past had no idea there's ways you can actually remove a mortgage off of your own credit report and also apply for new loans with that loan never hitting your credit report. This can save your credit score. It can save you thousands of dollars in interest by having a higher credit score. It can also make it a lot easier to qualify for future mortgages. In this video, we're going to cover exactly how this works, everything you'd want to take away. Traditionally, when you take out a loan, an FHA loan, VA, even conventional, that loan is always going to show up on your personal credit report. That first one you have might not really be a bad thing. It can actually help build credit by having that loan on your credit report. But as you start to stack multiple properties, you buy that second, third, fourth, what you're doing every single time is you're lowering your score by even applying for that loan, by having the credit inquiries. Once that loan shows up on your credit report, your credit age is going to go down. So oftentimes your score can actually go down by having so many different loans on your credit report. But really what the worst part is when you go to apply for another primary residence or just another conventional loan in general, it's going to be much harder to qualify with all these mortgage payments on your credit report. So these loans on your report are going to show up as a liability on your credit report. So every single lender is going to see that. Anyone who views your credit will see that too, whether you're applying for a car loan, a personal loan, any kind of financing, they're going to see these mortgages way down your credit report, and it's going to make your debt to income ratio much tougher to qualify for that next loan. There's a pretty easy method to never have these loans show up on your credit report. It's not really a loophole, not even really a workaround. It's the concept of applying for a DSCR loan. A DSCR loan, as you probably know by now, debt service coverage ratio loan, the loan that you will take out to purchase a rental property. It's always going to be an investment property purchase when you apply for a DSCR loan. So the biggest perk is a DSCR loan is a business purpose loan in the eyes of most lenders all across the country. So these loans are never going to show up on your personal credit report the vast majority of the time. The reason being, the credit bureaus, Equifax, Experian, and TransUnion, credit is supposed to be for personal reasons. A credit card, a personal loan, it's not supposed to be a loan for your business. An SBA loan is a business loan, and that'll never show up on your credit report. So really a DSCR loan is kind of the same concept. It's a business purpose loan, therefore it should not be showing up on your credit report. Oftentimes a DSCR loan can be placed under your LLC, and you're really technically just a co-guarantor for that loan. So why should you be penalized for having business activities, having this mortgage from that business show up on your personal credit report when you go to apply for an FHA loan or a primary residence years to come? In my experience, almost all of my clients have applied for DSCR loans. They typically never show up on your credit report. It's not impossible for a servicing transfer to happen or that lender to eventually report it on your credit. It is pretty uncommon. I recently had a client who had this happen. The servicing rights changed and the loan was sold off, and the new servicer reported that loan to the credit bureaus. What my client did is they wrote to the bureaus, explained that this is for a business purpose loan, a DSCR loan, and it was not under their name, but their LLCs, and this loan was removed off of their credit report. It's typically ideal to have this never show up on your credit report. The second best thing you can do is have it removed off of there. What this does is every time you have a new loan show up, it's going to lower your credit age. It's going to make it oftentimes harder to qualify when you go to buy a personal residence. So knowing these tips can really save you a ton of money with the interest you'll save by having a higher credit score, and it'll make it a lot easier to qualify for future purchases down the road. By not having it show up on your personal credit doesn't mean this debt does not exist. It just means it's not going to show up on your personal credit report. So you're still going to owe that money, and that lender still has the ability to come back after you because you are still technically the co-guarantor for that DSCR loan, but it's going to make your credit report look a lot cleaner. It's going to prevent your credit age from decreasing every time a new loan shows up on your credit report. And most importantly, it's going to keep your business finances completely separate from your personal finances, allowing you to qualify for potentially a higher loan amount because these liabilities are never going to show up on your personal credit report. Again, every lender is going to handle this a little bit differently than the next. The vast majority of lenders all across the country for DSCR loans are not going to report these loans on your personal credit. Definitely a great idea to ask your lender, ask your loan officer upfront, is this loan going to show up on my personal credit report? Even if it does, remember the angle we spoke about, writing to the credit bureaus to having this completely removed off of your credit report. Again, my name is Austin Clarence. I'm your DSCR loan expert. If you have any questions about what's showing up on your credit report, any tips, please reach out to me at all. More than happy to connect.